And we are off and running and to the races here. So welcome. Some new faces in the room. For those who don't know me, my name is Steve Nuri. As far as experience goes, I have about 17 years experience, over 17 years experience now in the market, starting off as an options trader on the floor of the CBOE, gradually moving on to futures, and then finding myself in the Forex markets. I'm the instructor and market analyst for PitView, and here today to teach a subject matter called the three-step process, three-step analysis using the PitView indicators, which I think you'll really enjoy. It's more of a basic class. I kind of split my classes up into two separate sections, basic and intermediate, well actually three, basic, intermediate, and live trading environment. And this is really built upon just introducing the students to simple ways to analyze the markets using the PitView indicators, which many of you that know my background know that I've never really endorsed or worked for any type of software companies, but this is a tool that I find to be extremely powerful in the markets because it answers the question that gets posed to me more often than not from students, which is essentially, Steve, how do we trade along with the market makers? You know, that's really what the entire thing comes down to, is a lot of retail traders, professional traders that are outside of the institutional world. They want to know, how do we trade along with the market makers? And PitView is an answer to that question. It's probably the best thing I've ever seen that allows students to actually digest and see what positions live the market makers are taking. So with that being said, let's go through our three steps. For those of you that are PitView subscribers who are on a trial or subscribe to the trial for PitView and are just now trying it out, three-step analysis, or the three-step process, comes down to three separate indicators offered by PitView, one being global view, the other one being group view, and then pair view. Essentially, if you think about it in terms of trading and analysis, a lot of what it boils down to, and here, let me bring up my little ink pen here. I always like using this thing for some reason. What all boils down to when you look at these three things, it's what we call, you've probably heard of it before if you've traded any market, is top-down analysis is really what it boils down to, what we use these three indicators for. You know, looking at the market as a whole, looking at currency pairs from top to bottom, and then looking at individual pairs to make our trading decisions, all three of which we'll be going over here today. So the common trader question that gets posed to me, you know, starting off here looking at global view, is which currency do I trade? You know, a common mistake, and this is a mistake that I've seen. I've been trading Forex since roughly 2000, so about 14 years now, after going from options to futures and then finding the spot Forex market, which I totally fell in love with. The one mistake that I see a lot of traders making in these markets is the fact that just like in the stock market, traders will fall in love with a stock and they'll only trade one stock, even if that stock is not necessarily what they call in play. It's not really moving. They'll still trade it because it's what they know. A common mistake that Forex traders make is not trading the in play currency in the markets. One thing to understand about Forex trading is the fact that market conditions are constantly changing. They really are. They're constantly changing. And different currencies will come to the forefront of the market, and they'll be what we call in play. And what that means is they're going to be the currencies that drive the overall strength or drive the overall weakness in the market versus all the other currency pairs. So when we look at this from an analysis standpoint, you know, when we ask the question, what is an in-play currency? It's the currency that is driving overall strength or weakness in the market. I also tend to call these currencies the bully and the wimp of the schoolyard. The other thing that you'll often hear me refer to these currencies as being are what we call the drivers, you know, the driving currencies in the market. Whenever you hear somebody say, well, this is the driver right now, all that means is that that's the individual currency that's driving strength or driving weakness. So when we talk about the bully and the wimp specifically, you know, the bully is going to be the currency that's strong against all others. What I mean by this is it's the currency that, and depending on your time frame, that no matter what currency you put it up against, it's getting strong against all the other 7 majors. We're going to look at the 8 major currencies that are normally traded on most brokerage platforms. But the driver, as far as the bully goes, is going to be the one that's getting strong against all the others. Lately, we've been seeing that currency be the dollar. The WIMP is going to be the currency that is weakest against all the other currencies in the markets. So the driving currency doesn't necessarily always have to be the strongest currency. Sometimes the driving currency can be the currency that's getting its butt kicked by all the other currencies, that no matter what currency you put it up against or how weak the other currencies are, the one currency that's getting weaker against all the others. Now, how do we find the in-play currency? We do that through something called comparison analysis. To give you a quick view of how this works on a chart through what we call comparison analysis, let's first look at how basic comparison analysis is done through a shorter term time frame in the markets by looking at the charts. Now, one thing I always remind PitView students and PitView traders of is what's shown on PitView is not necessarily shown on the charts. It's not really shown on the charts at all, because PitView is measuring the bid and ask price. It's measuring market maker imbalance between buying and selling pressure from all the market makers in the institutional feed by showing you what their positions are, essentially, what positions they're trying to take. Charts are just basically showing you what price has ticked by in the past. So basic comparison analysis, this is an example. I should probably update the PowerPoint. This is an example I used last month in August, looking at all the yen pairs over a short-term time frame. So we have the euro-yen right up in here, and when you look at the yen versus the euro, well, let me back up just a little bit. When you look at all these charts, do not all these charts look almost exactly the same? You get some, slight movement on one versus the other, but they look at like they're all going the same direction. That's the first thing you would notice. And these are all the yen pairs. This is pound yen, CAD yen, dollar yen, Swiss yen, Aussie yen, and New Zealand yen. So when you look at something like euro yen right up in here, and you were to say, okay, how is the yen doing against the euro? Well, euro yen is going straight down, which means the euro is getting weaker and the yen is getting stronger. If I looked over here at the pound yen, it's going down, which would mean the pound is getting weaker and the yen is getting stronger. Look at the dollar yen here, it's going down. That means dollar weaker, yen stronger. Swiss yen going down, Swiss weaker, yen stronger. CAD yen going down, Canadian weaker, yen stronger. Aussie yen going down, Aussie weaker, yen stronger. New Zealand yen going down, New Zealand weaker, yen stronger. So what do you see when you look at all these charts? If you had to ask, basic comparison analysis when you do it on the charts basically would say, if you were looking at the yen throughout these time frames, you would say, okay, well, what would I say is the prevailing trend on the yen right now? Well, I would say the yen is driving strength in the market. No matter what currency you put up against it, they're all getting weaker versus the yen, which means the yen is getting strong against everyone in this time frame. If you've ever heard the old trading cliche, trade with the trend because the trend is your friend. Well, in this case, during this time frame, this is what the prevailing trend is, yen strength. Now you can do this through, when you're looking at charts, you can do this, long term by looking at daily charts over the last 3 months. You can do it medium term by looking at like the last month or so, in the market on like a 4-hour chart. Or you can look back at if you want to find what the short-term prevailing trends are, you can look back at, let's say, about 1 week worth of trading on the hourly charts, and they'll all show you, long, medium, and short term what the trends are. If we have time here, maybe we'll go in and I'll show you how to do that on the charts, because charts are still valuable. PitView does not replace the charts; it actually complements the charts. It's used as a great confirmation and complement to charting. So looking at this, as far as global view, the first indicator that I'll show you, the first PitView tool, what global view is doing is it's going to show you, it's going to rank based on whichever time frame that you choose from strongest to weakest, which currencies are the most well bid and the currencies that are most well offered in the market. That's precisely what PitView is doing. It's showing you which currencies have buying pressure from the market makers, where market makers and liquidity providers are trying to raise their bids to buy, and which currencies are the most well offered from the market makers. Now what Global View is doing is when it's showing you these imbalance numbers and ranking them from strongest to weakest, because that's what it's doing. It's ranking them from strongest to weakest over, in this case, a 4-hour time frame. When you look at this number right in here, the dollar, when it says the dollar is the strongest currency during this time frame, it means based on market maker and liquidity provider activity that the dollar is being well bid against all the other currencies. So it's comparing the dollar against all these other currencies on the screen. And again with the euro and the Canadian and the pound. So it's not just measuring the dollar versus the euro, it's measuring the dollar against all these other currencies. So it's giving you a straight up comparison analysis as to which one is strongest and which one is weakest. So in this case, we would look at this and we'd say, okay, which currency has been the most well-bid currency from the market makers over the last 4 hours? Obviously, that would be the dollar. We would consider that to be the bully in the schoolyard, if you will. On the flip side, if we were to go in and say which one has been the most well-offered currency, meaning selling pressure from liquidity providers, which one would we say? Well, we already have the dollar up here on top. Obviously, the Aussie right down in here is the most well-offered currency. Now, we do have to take another step from Global View, because the first thing people would look at and are tempted to look at is say, well, if the dollar is the most well-bid currency and the Aussie is the most well-offered currency, the first thing you would want to look at is comparing these two on a chart, if you will. And I pulled up a chart here on the Aussie. And one of the benefits of PitView is that you can clearly see during this time on the Aussie US dollar, and I'm looking at more of a short term over that 4-hour period, that the Aussie is making lower highs and lower lows. If you were a trader and you see that the Aussie is very well offered against the dollar, so when this goes down, it means Aussie's getting weak. So Aussie's getting weak and the dollar's getting strong when this chart goes down. During this entire time frame, I do remember this time frame because that's where I pulled this off. You know, whenever this was reaching up towards a trend line, you can see how sold it got once it was reaching over the trend line, how much selling pressure came into play. And that's one of the things that can give you confidence of taking like short trades on the Aussie dollar when it gets to here, because during this entire time frame, it was showing it as having a large sell imbalance. So even when the market was going up, you had confidence of being able to take trades at these positions if you wanted to. This is just a kind of a hypothetical, because each time it came up and tried to make those lower highs, if you will, those counter trend moves, it was still showing the Aussie being weak and the dollar being strong. Now this brings me to the second tool. Remember, Global View, essentially what it's doing is it's just telling you individual currencies from strongest to weakest. But after we've found which currencies are in play, meaning which currency is strongest versus from a different throughout the different time frames and which ones are weakest, it's now time to rank the individual currencies it is trading against. Against from strongest to weakest. Now for this we use what we call group view. Now the purpose of group view is this. You know, let's go back to the charts and look at comparison analysis. When you look at the yen versus all these other currencies on here, what you see is, of course, the yen is strong versus all these other currencies. However, when you look at the individual currencies that the yen is trading against, you'll see that it's the slope of the trend on the yen is more extreme on some of these pairs than it is on others. For example, if you look at the slope of the trend of the yen versus the euro, you see that this is much more extreme to the downside, almost going straight down. And same thing with the dollar right in here. However, when you look at the yen versus the pound in this case, the pound has some more significant moves. You see it actually goes up right in here, comes down. So it has more of a seesaw type of movement and not as extreme a movement as the other pairs. So what group view is going to do is it's kind of going to analyze, all right, which we know the yen is strong, but which currencies is the yen strongest against, and which currencies are the yen trading the strongest against as far as relative strength. That's what group view is going to do for us. So after we've checked global view, and I actually switched up the slides here to reflect the yen. If we're checking global view to find the strongest or weakest currency, in this case, if we saw that the yen was the strongest currency, as we saw on those slides that I just showed you on those individual charts, we see the yen is strong. Now what we're going to do on global view, and sorry for switching up currencies on here, I forgot that I had done that, but we see here that the yen is very strong here at the top. Now initially a lot of people, when they look at global view, this is global view right in here, they're initially going to probably say, okay, yen is the strongest and New Zealand is the weakest. However, since what's reflected on PitView is not necessarily on the charts, we might want to take another step to confirm which pair we might want to trade. So what we would do is we would double click on the yen and we would pull up group view just to confirm who is the yen trading strongest against, which currency is the yen trading the weakest against. So group view acts as kind of a confirmation to global view. So when I pull up group view for this same time frame, like right in here, you can see that, okay, when you pull up the yen, and you can see they switched the yen here to make it the base currency. The reason why is because they kind of flip-flop the bid and ask, because we're looking at buying versus selling pressure. Whenever you see an asterisk, it means that they've crossed the currency. Like New Zealand, the yen New Zealand actually shows up on pair view as New Zealand yen. It's just showing that they switched the base and quote currency around whenever you see the asterisks, because they need to make sure that that they're reflecting the bid versus the ask on all the currencies that you choose. So taking a look at the yen here, you can see that the yen is certainly the strongest bid against New Zealand. So that would be bearish for the New Zealand yen pair, because if the yen is strongly bid against New Zealand, that would mean yen strength, which in this case, and New Zealand weakness. But we would be expecting New Zealand yen to be going down in this case, because in this case the yen is showing more buying pressure, if you will. It takes some getting used to, but it's an extremely powerful tool. So that's what group view is going to do, is it's going to rank the yen. Okay, which one is the yen strongest against to weakest against? And it shows, okay, the yen is strongest against New Zealand. It's pretty strong versus the dollar. And it will show you that relative strength from strongest to weakest, to which ones the yen is trading strongest to weakest against. Sorry for being repetitive. Broken record here this morning. Sorry. All right. So, this is certainly the area in which I would go to a chart. I would look at global view to see which individual currencies are strongest to weakest. And I know a lot of you are probably asking about time frames, and the thing about teaching trading classes is that you often get people of different time frames. Some of you short-term, medium-term, long-term. So in this case, I'm looking at more of a swing type of trading, looking at hourly charts. So we can check the chart from here. Once I see which currency is the strongest, once I confirm which currency that individual currency is trading the strongest, weakest against, this is generally the point at which I'd go to a chart. And oftentimes, this is where you can find some really great trading opportunities, because in this case, during the time frame in which we traded this as a class, we saw that New Zealand yen was trading at a horizontal support level. So when you look at this little support level right in here, we know that New Zealand is oversold, essentially, is well offered, which is bad for New Zealand. We know the yen is being very strongly bid or bought as far as buying pressure between the bid and ask price by the market makers. And it's also coming down to a horizontal support level. So if I'm trading off of these 1 hour charts and I see that New Zealand yen should be, based on the buying and selling pressure, it should be going down, and I see that it's hitting a horizontal support level, this would be a case where I'd be looking, certainly, especially if you like trading channels or anything along those lines, like trading consolidation breakouts, certainly be looking for New Zealand yen to be breaking through this support level right in here. So the next step here, as far as what's next, is I'd probably want to take a closer look at New Zealand yen as far as looking at the market maker, the individual market maker activity. We've already gone through the first two steps. So the group view summary being that it complements the three-step process. It shows you the details of each individual currency. It's not very hard. Everything's just a click away. And remember that all of this is based on buy and sell activity from the individual liquidity providers inside the bid and inside the ask price. So step one, picking a currency through global view. Step two, we pick a pair through group view or confirm the pair through group view to make sure that we have the currency that's, we're matching up the currency that's the most well bid in the market with the currency that's the most well offered in the market. And then step three would be going in and picking a trade opportunity through pair view. So pair view is really the driver of where all of the indicators from PitView come from. It's showing you the most detailed explanation of what's happening with each individual liquidity provider in the market between the bid and ask price. So as far as pair view basics, this is really where the rubber meets the road. This is probably where, at the point where you'd probably put pair view up on your screen and you'd start analyzing and looking for trade opportunities to either buy or sell. So looking at pair view, let's take a look at some of the basics on it. This is generally what pair view is going to look like when you pull it up on your screen. I generally like to simplify mine a little bit to only show just a couple of columns. But in this case, I'm looking at the New Zealand yen over that 1 hour time frame. So let's go through just some details for those of you who are brand new of what pair view is showing you. And this is where you're going to really see where the rubber meets the road and how cool this and powerful PitView is. Let's start over here under LPID. What is this? Well, this is what everybody wants, right? LPID stands for Liquidity Provider Identification. What PitView does is it takes an institutional feed. Most of you may not know this, but when you trade through a broker, whether it be like FXCM or FXDD or any broker around the world, generally speaking, when you're seeing your bid and ask price, most brokers are only dealing with maybe 1 or 2 liquidity providers. What PitView is doing is via an institutional feed of looking at all the liquidity providers in the market, major banks. What they're doing is they're taking the actual actions being taken by all the liquidity providers in the market to show you what the total buying and selling imbalances are. Now, in order to provide that data to you, of course, the banks, the liquidity providers require anonymity. So that means that instead of saying, and I don't know who these individual liquidity providers are, who the underlying banks are, but instead of saying LP34 is, let's say, Barclays or Bank of America, we assign them an ID, and that'll remain constant. Once the liquidity provider gets assigned an ID, that'll remain the same. So that's where the anonymity comes from. They require anonymity, so we can't tell you which banks they are. We just assign them an identification code. Or else they probably wouldn't allow us to disseminate the information if we actually showed the names of the banks. So looking at the next little column in here, once we know, and a lot of our PitView traders will become, I like to call it groupies of individual liquidity providers. Once you get to know PitView a little bit better, you'll see you'll start to kind of track individual liquidity providers. The total percentage here is showing you the total percentage of activity at the bid and ask price of who's the most active in either raising their bid or lowering their ask over different sessions. The U.S. session, the Asian session, the Sydney session, the London session. So what it's going to tell you right in here is it's going to rank the liquidity providers from who's been the most active in the market to the least active. Now down in here, this will always add up to 100% because it's always showing you 100% of liquidity provider activity for an individual pair. For example, this is telling you up in here that from the start of, I believe this was from the start of the U.S. session, LP34, as far as all the activity at the bid and ask price, as far as when the bid and ask has changed, has controlled about 43% of the market activity at the bid and ask price. And you can see LP29 down here hasn't really been doing much activity at all at the bid and ask price. And again, this will always add up to 100. This is the totals area right down in here that's going to total out each column. And it's going to use a formula based on, making sure that it's weighted towards the more active liquidity providers when it's giving you 100% of the activity. So the 1 hour L, 1 hour F, and 1 hour T. This is a common question that I get from a lot of PitView traders is what do these things mean? 1 hour L is for leading activity at the bid and ask price. So it's showing you the buy and sell imbalance for when liquidity providers have led inside the bid and ask. For those of you who haven't attended the Understanding the Bid and Ask basic course, which you can find on our website, by the way, under our university, the bid-ask imbalance, if you will, for leading is based on the imbalance of how many times a liquidity provider has led inside the bid. What is leading inside the bid or leading inside the ask? That is whenever a liquidity provider creates a new bid price, raises the bid to a higher level to where they're willing to buy at a higher price, or lowers the ask to where they're willing to sell at a lower price. Leading is when that market maker liquidity provider is the first one to do so. They're the first one to either raise their bid. That's called leading inside the bid. You're the first liquidity provider to lead inside the bid or to create a new bid price. Leading inside the ask is the opposite. You're the first one to lower the ask, the first one to where you're willing to go inside the ask price and create a new ask price. That's called leading. That would be considered the more aggressive between leading and following, because that means the market maker is willing to either be the first one to either buy at a higher price or sell at a lower price. And the imbalance, for example, the LP34, when it shows their leading activity at the bid and ask, is showing you that the green 0.35 means that they've slightly favored the bid price between the imbalance between the amount of times they've either led inside the bid or led inside the ask. Again, we have all of this information is in our other basic course of Understanding the Bid and Ask Price, which most of you have already gone through. So this is showing. So this is going to add up and show you all the totals of what activity has been done whenever market makers have led inside the bid and ask, right down in here. So this would give you a total based, and it is weighted, by the way. It's going to give weighting to the more active market makers, showing you as far as the total activity for 100% of the market maker activity. It's negative 3.04, which would favor the sell side of the market. It would favor the sell side on New Zealand yen whenever they've led inside the bid or ask. Following, if you lead inside the bid and ask, you're the first one to either raise your bid or you're the first one to lower your ask. When you follow inside the bid and ask, that means that if another liquidity provider is the first to raise their bid, if I'm a market maker and I see another market maker raise their bid price, well, instead of trying to beat their bid and raise my bid to where I'm inside the market or inside the bid and ask, I may choose to just raise my bid to match that new bid or ask price. That's called following. When you follow another, that's just it is just what it sounds like. You're following another bid market maker to the inside bid or the inside ask price. It still is a bullish or bearish sign, because you are either willing to buy at a higher price or sell at a lower price. But it's certainly not as aggressive. It just means that you followed to match the bid and ask. The column that I most totally look at, and again, this is going to rank it from, through all the market maker activity, and down here, this will kind of show you where, based on 100% of the market maker activity, where what side they favor as far as the totals. Negative 2.03 would mean that's a sell imbalance, so you'd be favoring shorting New Zealand yen. The 1 hour T is an algorithmic total. What it's going to do is it's going to measure based on the percentage of time on leaders and followers. It's going to give you an algorithmic total of where each market maker stands as far as their total amount of activity when they've either raised their bid or lowered their ask price. The part that students always ask me, which column do you usually look at, Steve? And to be honest with you, a lot of my trades are done, and a lot of the live trades I do with my students are using PitView. I'll generally have my pair view up, and I'll only have this column right down here open to show me what the total amount of activity has been at the bid and ask price for 100% of the market maker activity. In fact, sometimes I won't even have all of this area up in here on my screen. I'll just have this showing on my screen right down in here. So negative 2.55 means that out of all the activity at the bid and ask price, whether it be leading and following, it favors obviously the sell side of the equation on New Zealand yen. Some of you may be confused on that if you have not watched or gone through the basic understanding the bid and ask presentation. So you can always watch that, and I go through a little bit more clarity on those individual subjects. As far as using PitView, 3 typical ways in which our traders use PitView for trade confirmation. Again, going back to the question that gets posed from most students, trade confirmation is essentially when you enter in, if you have an underlying trading method or strategy that you already like to use, maybe it's a moving average crossover strategy, maybe you like to use stochastics or MACDs or other indicators that give you buy and sell signals. When you're using PitView, if you get, let's say, a buy signal on an underlying, strategy that you're already utilizing, but you also see that PitView, that the market maker activity matches up with that buy, then that's the ultimate trade confirmation, to where when you're buying and selling and you're able to confirm that through PitView that you're on the right side of where the market makers are taking their positions, it can give you a lot of confidence on giving you a valid buy and sell signal. What this can also do is prevent the dreaded whipsaw effect. It happens to me still. PitView cannot prevent whipsaws 100% of the time. Nothing is 100% accurate in the markets. That's why trading is more of an art form than it is a science. But it does prevent quite a bit of whipsaws in the market because you've all had it done before. You enter into a trade, let's say you buy, you think it's going to go up, and then all of a sudden the next bar comes down and you have a stop order in and it stops you out. That's called a whipsaw because it goes up and down and stops you out. Knowing that you're on the right side of the market maker direction can give you a lot of confidence in your existing strategies. Trade management, when I say maximize profits and minimize losses, if you see large buy and sell imbalances occurring on the underlying instrument that you already may have bought or may have shorted, it can also give you confidence to kind of stay in trades longer to maximize your profits as it's going in your favor if you see that you're on the right side of the market maker activity. It can also help you minimize losses by getting out of trades earlier if you see large shifts in the buy and sell imbalances. So it can really, trade management is another way that people use it for trades that they're already in. And then we also have individual PitView strategies, which I go over, where you can use it as a standalone trade entry or trading methodology of buying and selling based on just the imbalances that are shown on the PitView screen. For right now, let's talk more about trade confirmation because this is probably the most simple, basic way in which PitView is going to be able to, the PitView indicators in general are going to be able to help you out immediately in your trading. So trade confirmation would look like this. Now, I pulled this up for some of my students to show them an example of an existing strategy using a trade confirmation. Now, I know we were just looking at New Zealand yen. You might be thinking I'm jumping around a little bit, and I kind of am. But let me show you just how this works from a trade confirmation standpoint for an existing trading methodology. This is a system that I like to trade off of a shorter time frame. As I said, I trade multiple time frames in the market. I trade this off of a 5-minute chart where I look for consolidation to occur in the markets from between a certain time. In this case, this is what we call the Asian session. That's the Asian session between those red lines. This is what we call London breakout, which is a very simple strategy for when the London markets open. This is 3 a.m. Eastern time right in here. When the London markets open, you wait for the market to either break through the Asian low or break through the Asian high. If it breaks the Asian low based on certain parameters, you'd be a seller. And if it breaks the Asian high, you would be a buyer. And essentially what you're looking to do is piggyback off the bank traders in London on direction from the bank traders in London because the biggest concentration of institutional traders of big driving institutions in the market happen to reside in Europe and London. So in this case, I used to just blindly take buy and sell trades whenever anything broke out through the high or the low in there. But what often can occur when the London traders open the market on this red line in here is that they'll bring it down, they'll break the price into a new low, and then they'll come right back up and break it up into a new high. And even though this is a great system to trade, that would be what's called a whipsaw. And so when I started using PitView, what I started doing is that when I get a buy or a sell signal, in this case we get a sell signal because it broke through the low, all I want to do is I want to look and see, okay, the 1 hour totals on PitView, it breaks the Asian low by 1 pip. That gives me a sell signal. The 1 hour total is showing a sell imbalance, showing the market makers are certainly favoring the sell side on the euro-dollar pair. The 5-minute total, which is the pair I'm trading with, is also showing a sell imbalance. Oftentimes, the times when this would prevent a whipsaw is that sometimes when this breaks through the low, as it does, these will actually be green, showing that they favor the actual buy side of the equation, and so I won't take the trade. But in this case, they actually do favor my direction, and so it gives me more confidence to take my sell trade on the euro-dollar pair. It's just a way that you can use it for confirmation by just looking to see if PitView is green or red, if you will. If it's green, it favors the buy side. If it's red, it favors the sell side of the underlying pair that you're trading. So in this case, the action would, of course, be to go ahead and take my sell trade. If this were green right in here, I would not take the sell trade because that would not be confirming my existing strategy, and that's what has helped me out with my individual trading results. So as far as trade confirmation, most people ask me, can it be as simple as green or red? Yes. If you have an existing trading method, it can be as simple as green or red. You know, if it's green and I'm getting a buy signal, it matches up with the buy side. If it's red and I'm getting a sell signal on my underlying strategy, it's matching up with my sell side of the equation. Now that I've shown you how it works from a trade confirmation standpoint, though, let me go ahead and I'll go in and I'll show you how it works from the 3-step process standpoint. So in this case, we'll go back to that New Zealand yen that we were looking at. So let me just refresh your memory. The first step we made is we checked global view to find the strongest and weakest currency. We saw that the yen was very strong in the market, and we double-clicked on the yen. We already see the New Zealand down here, but we always want to double-click just to make sure when we're looking at global view. We want to double-click on the yen to see where group view stands. In this case, we see that the yen is trading the strongest against New Zealand, that it has a very large bid activity versus New Zealand. So remember, if there's more buying pressure on the yen versus New Zealand, that's good for the yen, that's bad for New Zealand. The reason why there's an asterisk is that we'd be bearish on the New Zealand yen pair. Okay. We looked at the chart. We saw that it was hitting off of a horizontal support level, that it was starting to hit a horizontal support level. This would be an example of just a very simple breakout trade. New Zealand yen's trading at horizontal support. Global view confirms the strong yen. Group view shows yen strongly bid versus New Zealand. We'd be looking for this to go down because when it goes down, that's New Zealand's getting weaker, the yen is getting stronger. So in this case, what would we wait for? Let's just use simple support and resistance, right? So simple support and resistance would tell us, okay, well, let's look for it to break through this low. If it breaks through this low, then I'm going to be looking to sell New Zealand yen. So now let's look at this. This was an actual trade that we looked at. It's breaking through horizontal support, and this is what PitView shows. At the time that it breaks through support, you see that it's red in all categories. It's red under leading, under following, and under totals. So it's still showing a large sell imbalance on the 1-hour charts on each of those 3 methods, on each of those 3 columns, I should say. Some people might wait for the price to close beneath this breakout on the 1-hour charts. However, you can actually be more aggressive now that you're using PitView to use it for confirmation, because what I did in this case is that, I'm sorry, let me go back, sorry about that. What I did in this case is I went ahead and put in my sell right when it broke through the low, put in my stop right in here. That would have been my entry. My stop would have been right up here above the previous high, and then look for what we call a 1-to-1 risk-reward ratio on the trade. And I didn't wait for it to close. I entered as soon as it broke down below. I was actually closer to right in here. And yes, I do, question that came up. I do use a lot of 1-to-1 risk-reward, especially on intraday trades. I use a lot of 1-to-1 risk-reward. I put up my risk. That's called making a square deal with the market. You're willing to give the market back what you're willing to make. So the result on this is, you see right when it breaks through on the sell entry at 86.275, I got my stop up here at 86.509. PitView is confirming this right down in here. Whoops, I'm sorry for drawing a line right through that. And then there's our limit reached at 86.041 for a quick 23 pip gain in just a couple of hours, just based on doing that kind of top-down analysis in the markets. You know, once you find the strongest currency and then you find the pair that you want to trade, you go to a chart, and all you got to do on the chart is really look for your excuse to either go long or short that underlying currency pair, and then use PitView to confirm the trade. It may be confusing to you now because one of the things about PitView is it is a different way of looking at the market. I always tell students you're essentially looking at where the rubber meets the road. You're looking at that magical place between the bid and ask price, which really will tell you what direction the market makers favor. And it's a perfect complement to the charts, as you can see, because we don't have to trade with very complex methodology. You know, we can use, you know, simple support and resistance. In fact, that's kind of a descending triangle right in there. You can use just simple support and resistance to enter into your trades, and it doesn't have to be extremely complex, if you will. So the power, pick a currency, pick a pair, pick a trade opportunity. That's what it really boils down to. Everything is complementary to the charts. You know, you're using the buy and selling pressure from the actual market maker themselves to confirm trade opportunities that you actually get on the charts. And if you hear some snoring in the background, it's because my dog came down here and laid just outside of reach from me, and it snores like a 300-pound man. So if you do have any questions on this, feel free to shoot me an email. Hold on one second. Let me see, how much time do we have left? Or do I have any time left, would be the question. I do. I have 15 minutes. All right. I got through that in 45 minutes. Well, instead of stopping, let's go ahead and let me pull up some charts here and just kind of show you how this works in the real world. That's always good, right? Yeah, can you just show me, Steve? Absolutely. All right, so let me kind of show my screen real quick. I got my MetaTrader up in here. Let me kind of put it off to the side. Let me bring up PitView. Now, as of late, I've been doing, you know, quite a bit of what I call swing trading. I've been trading a lot off of like the 1-hour time frames and such. Let me pull up my indicators and let me first go to Global View. If you go under Global Indicators and go to Open FX Global View, that'll bring up the Global View indicator. Now I can change the time frames and customize these time frames. You know, in this case, it's immediately going to bring up Global View and show me what's been happening over the last 4 hours. Now, if you first open up your PitView, you may see it. You know, you may see it show up like this. Okay, like when you bring up Global View, you may see all these multiple time frames on there. I tend to keep things pretty simple, so this is just personal preference, as I know a lot of you that are, maybe not in this class, but a lot of the more institutional type of traders that we have, professionals, they may like to look at more information. But when I have Global View up, what I'll tend to do, if you right-click anywhere on Global View and go to Show and Hide Columns, is I'll uncheck Session Leaders, Session Followers. These are more of your hourly time frames. And I'll uncheck the 30-minute, all I'll have checked on that is the session total. Because all I want to see is just what, since the beginning of the session or for the last 4 hours, I want to see what the market maker activity has been for the last 4 hours. If I'm trading off my 1 hour time frames and I want better confirmation, I can change, you can always change the time frame on here. Everything's a right click away. So I can go to change time frames and sessions, and I can say, okay, under rolling modes, right down in here where it says session length, I can put in 1. And if I'm trading off hourly charts, I can change, you want to change it right in here, click on apply. And you can see, okay, for the last hour, what's been the most well-bid currency and the most well-offered currency from a market maker perspective? The question that came in, can we look at multiple time frames at once? Yes, you can open up multiple instances of global view. Sorry about that. The question is, can I open up multiple time frames? Yeah, you just open up multiple PitView windows, and you can look, if you like using top-down from a time frame, if you want to look at like a 4 hour, a 2 hour, and a 1 hour global view to kind of confirm different time frames, you can certainly do that just by going in and pulling up individual global view windows. But let me just stick with this 1 hour real quick just to keep things simple. The last hour, I see dollar has been very well bid. I see the yen has been extremely well offered. What I would do next is once you have global view up, every other indicator from PitView is just 1 click away. I'm going to double click on the dollar. And that'll bring up group view. Now this is precisely the reason why you pull up group view, is because since what's shown on here is not shown on the charts, it's showing the dollar overall being the most well-bid currency and the yen being the most well-offered currency. But this is precisely the reason why we pull up group view, is if we want to see, okay, who's the dollar trading strongest against, it's actually trading the strongest against Aussie. Now the yen is still up there as far as the buy and sell imbalances, followed by Swiss, New Zealand. And you can see down in here the dollar's well offered or not trading as strong against pound, euro, and Canadian. But out of all these currencies in here, it's certainly trading the strongest against Aussie. This might be the opportunity where I would go in and start looking at charts. So I'd say, okay, well, dollar's very strong. It's very strong against the Aussie. Let me go into my MetaTrader platform. And here, I'll just put these right up in here on the top left-hand corner as I usually do. I always like to look at as much chart as possible. And let me go in here, and here's the Aussie dollar, and I'll take a look at the Aussie dollar. So dollar is very much well bid against the Aussie. Dollar's been one of the stronger currencies throughout the day. Now this is interesting right in here. This is where the power of PitView comes into play. When I look at the last several hours on what's happening, and I might pull up a 4 hour time frame on this also just to confirm it. Dollar's well bid against the Aussie, so it's showing a lot of buying pressure of dollars versus the Aussie. Now I have you see how there's an asterisk because it comes up as the Aussie dollar pair on your screen. Now what's interesting about this is when you look at this over the time frame, and also on the 4 hour that we just had up for the global view. In fact, let's pull up a full 4 hour real quick because this actually looks like a tradable trade in my opinion. Let me pull up another global view. And again, all I'm going to do is I'm going to bring up the session totals. That's all I want, session total. I'll go to change time frames. I'll put up a 4 hour chart on this also. In group view, I like to do the same thing. I like to look just at the session totals. For some reason, it's not pulling up right now, but I do see the dollar still very much well bid over the last 4 hours. Aussie's still well offered over the last 4 hours. I'm just pulling this up for giggles, but that's really what I would look at. I already know that it's the dollar's well bid against Aussie. Let me go back to the chart. This might be getting a little too complex for you, but one thing you see is that dollar's well bid against the Aussie, what's happening to Aussie? It's going up, right? It's going up. In fact, for those of you who have attended my intermediate course, one thing I can tell you right now that this is almost a perfect harmonic Gartley pattern. Let me add in something here. I forgot I had 61.8 at, sorry, I'm just doing some MetaTrader stuff here. I taught another class on the 78.6 retracement level. This is what we call a Gartley pattern right in here. This is what we call a bearish Gartley pattern, where we have an impulse move, which is the impulse downward move right in here, followed by what we call an A, B, C, and then we have a C correction forming in the market coming up right to here, to where this would be an example of, as this starts to come up, this would be a perfect example of, if this comes up and hits this 78.6% retracement level, and I still get confirmation at that time that the dollar is well bid against the Aussie, it would show me that once it comes up to this level, this is a perfect example of how PitView can act as a kind of a leading indicator. This is one to where the Gartley pattern, I would look to possibly be a seller here. When it hits this 78.6 level, put my stop right up here above the swing high, and then look for a 1-to-1 risk reward at the minimum on the trade. All based on, when I look at this Aussie dollar chart, you know, now that I've gone to a chart after confirming that the dollar's strong, it's very strong, it's still very strong against Aussie. If this can come up and touch this 78.6 level at this time, even though it's coming up, this is PitView can act as a leading indicator, because remember, what's shown on PitView is not necessarily shown on the charts. Even though this is going up, it's showing the market makers are still favoring the sell side of the equation on the Aussie dollar. So this would be an example of being able to go in and possibly do a sell. It's actually looking like a pretty damn good trade at this point. A sell entry at the 78.6 level. When it hits 78.6, if the dollar is still showing well bid against the Aussie, I would certainly be an aggressive seller at that price. See, I didn't even know that trade existed until I just saw this on PitView. I didn't even see that forming this morning, and I'm a big Gartley trader. So I'd put my sell entry right there. I'd put my stop right up there above at least 1 pip above the 100% retracement. So right up in here. And then I would put my limit at a 1-to-1 risk-reward ratio. This would be a finely matched up trade, because it would almost perfectly match what's been occurring in the markets as of late, with overall dollar strength has been a big driver in the market as of late on the charts, and that's being confirmed today by the dollar being a big driver of strength on the PitView indicators. But that would be A to Z of how I'd kind of go in and start looking for trade opportunities. If you trade off of a 5-minute chart, you know, a lot of you like to look at longer time frames, and all of us have different methods in which we trade. The same type of time frames you use in your charting. Let's say if you trade off of a 5-minute chart, you like to confirm the overall trend off of a 1-hour chart. Well, you can pull up multiple instances of all the different indicators to try to find opportunities and to confirm the overall trend of your trade entries. Question, are you going to take this trade? Yeah, when it comes up here to the 78.6, you might want to watch that. I am not an investment advisor, nor am I, this is not investment advice, but I will tell you that just as a disclaimer that I probably will take this trade. This is a strong Gartley pattern right in here. This is what we call a harmonic Gartley pattern. I'd be a seller right here at the 78.6 level. And if it gets close to it and it starts turning, this high right in here, we have a confirmed C correction. If it gets even close to the 78.6 and I start to see any type of red start to come into play, I might go ahead and get into it and still put my stop up here and look for a one-to-one risk reward based on the difference between my sell entry and my stop. No, I never BS with people. If I'm looking to place a trade, I'll put it in. I do a lot of live trading with my students, so, but still need to wait for it to get a little bit closer to that 78.6 level. Anyway, I'm going off target here. You know, we have about 3 minutes left. Some of you had received this email last night. Another indicator that we've added to the equation to kind of make this three-step process, and this is really cool. This actually came from trader feedback. Now I'm going way off base, so now I'm going to confuse the hell out of everybody. Some of you received the email last night, though. We actually built another tool which combines this global view with this group view, because a lot of the feedback we get from the PitView traders is the fact that, you know, they don't like having so many windows open up on their screen. This has not been rolled out as of yet. It may have been, but I don't believe it has been as of yet. There was an email kind of announcing when the rollout would be. But we've actually added something called Total View. You see this Total View up here in here? This is in kind of beta testing mode right in here. Total View is freaking awesome. What it does is it combines these two things together. It combines Global View and Group View to where you don't even have to have these on your chart anymore. To where you only have to have this one window open, because what it does is it has all your time frames up right down in here, to where you can switch between 30-minute, 1 hour, 2 hour, 4 hour, and you see it also pulls up the pair view along with it. You know, if you're looking at 1 hour, what it will do is it will go ahead and it will actually rank the currencies from strongest to weakest right here via the global view window. And then to the left-hand side, it will actually rank like the dollar. It combines the group view. So it's showing 4 hours, dollar strong, yen weak. And then if you look to the right-hand side, it will also show you, okay, who's the dollar trading strongest against Aussie. And then it will rank them from left to right, from strongest to weakest against the dollar. So it's a cool little X and Y access thing that our student that we're going to be rolling out to PitView subscribers here. That makes it much easier, to where you can just quickly switch between the windows, and you can see up here how it automatically switches those windows up here in pair view also. So that's a really cool tool that I like, and you can switch in between things just by double clicking on Aussie US dollar. If you want to look at, let's say, dollar yen, you can look at that also just by clicking on the individual currencies. I don't want to confuse anybody, but this is global view and group view together. You can almost say we've gone from a three-step process to a two-step process now by combining those. Very cool stuff. Anyway, I'll be teaching some more classes on that total view once it actually officially rolls out to the students, but I couldn't help myself. I had to show it real quick. People that started off in the class today, they were probably like, you know what, I was following you a little bit until you went live to your screen. Apologize. All right, if you do have any questions, feel free to email me. I can be reached at steve.nuri@pitview.com. I welcome any and all students to email me. I also own my own education company to where I teach trading methods and strategies outside of PitView as an independent educator. People often email me on that, and yes, I am the same guy. To subscribe to PitView or to start a free trial, if you're a trial user, if you haven't signed up for a free trial yet, you can go to www.pitview.com/web, and that'll get you started off with a free trial. Or if you're looking to subscribe to PitView and become one of our subscribers, you can do that via that website also for, I believe, a discount off the normal rate that's listed on the website. Other than that, that's all I got, folks. It's been an enjoyable experience being here and being in the room with you this morning. Just let me know if you have any questions, and I will chat with everybody later. And make sure to let me know if you have any questions, and hopefully I'll see you all in another class here soon. All right, bye-bye, everyone.